Welcome, everyone, to the launch of the Tietoevry's Banking's 2024 Cash Management Survey Report. Today, we have an exciting panel with experts from the treasury space to discuss the key findings, trends, and challenges facing corporate cash management in 2024 and beyond. I'm Joy Macknight, freelance journalist and former editor of The Banker, which is part of the Financial Times Group. And I have a great panel today. I have Royston Costa, who's assistant treasurer at Ferguson, Rachael Kennedy, head of content at Contentive, and Sathish Padmanathan, head of cash management at Tietoevry Banking. So, Sathish, as the person behind the commissioning of the survey, what led you to actually conduct the research? And then were there any specific cash challenges in cash management that you wanted to better understand?
Yeah, absolutely. Thanks for the question, Joy. At Tietoevry Cash Management, we really strive to build solutions that really works for our customers, primarily banks and their customers, which are corporates, right? So we have gained significant insights through these surveys over the years, and the outcome of the survey has actually influenced their roadmap. This ensures that we respond to the ever-changing market needs and provide the latest and greatest cash management offerings to our customers so that our customers stay relevant in the ever-changing market. So this is the motivation, and our experience over years has been just brilliant.
Excellent. And then were there any specific challenges in cash management that you've seen and that you wanted to better understand?
Yeah, I mean, the main challenge is the change we've really seen from high value payments to high volume payments. The introduction of instant payment in most of the countries that's happened in Asia. It's happening now in Europe as we speak through the regulation, and banks and corporates are really struggling to respond to this shift, adapting their treasury and liquidity systems to respond to this change. So that's the primary factor that we want to learn, and how can we tune our solutions to kind of really adapt to this change.
Excellent. Okay. So out of the survey, we've seen an increase in the number of stable banking relationships compared to 2022, for example. So what do you think is driving that trend? And then how important is diversification in managing banking partners?
Yeah, clearly, there is a shift from 2022 that indicates a maturing market where companies try to find balance in their banking partnership. Of course, 2022 was an era just after COVID, where the needs were different. Businesses were trying to have this V-shaped recovery. But what we've also seen in this survey is nearly a third of respondents still increased their banking relationship, indicating diversification strategies. We've also seen a positive correlation between company size and the number of bank relationships. If I take one example, large corporates, tend to maintain more diverse, banking portfolio, mainly focusing on managing their foreign exchange risk and ensuring that they get access to the credit line, right? While small and mid-tier corporates stick to the current banking partnership and may not necessarily go with diverse strategies. Yeah.
Excellent. Okay. And then let's talk a little bit about real-time cash visibility, which I think remains a challenge, particularly for, let's say, larger organizations. What steps can Treasury take, do you think, to enhance cash visibility, especially in multi-country operations?
Brilliant question. I think using effective pooling mechanism is the key to improving real-time cash visibility, especially for large corporates. For example, the most popular pooling mechanism is the zero balancing or target balancing, which enables the group's total net liquidity per currency, and it shows all zero balancing transactions payments and collections in a structure very effectively. I think this is one of the most popular techniques that we have seen that corporates use in the survey. There are also other techniques like notional pooling and in-house banking, which are alternate options, but we have slightly seen a decline in these techniques compared to the zero target balancing.
Excellent. All right, that's super interesting. Royston, I'm going to bring you in now as a corporate treasurer on the call. From your experience, what do you think is the most pressing challenge in cash management today?
Great question, Joy. Where do I start? I think certainly cash flow forecasting, no surprises, is still a big challenge. You mentioned cash visibility. I mean, certainly for Ferguson, that's not something of an issue for us, but there are still corporates that struggle to get cash visibility, particularly for more, geographically limited or restricted areas in the world. I did want to kind of comment slightly on and finding the survey and what Sathish was saying in terms of the diversity with the banking group. I think that makes complete sense to me, particularly, again, not just since the pandemic, but since some very high profile banking failures. No surprise that corporates want to diversify their risk. But interesting enough, for me, I also see diversification actually being something that the banks prefer as well, because regulation, frankly, you think about couple of years ago where frankly I couldn't place a deposit with one of our banks because it was a quarter end, it was too expensive for them, and it was above their limit, or the limit they were prepared to take on. This is probably more applicable to the European banks than I would say the American banks, but there's still that challenge that corporates certainly have to face. And I think then the other aspect is that no surprise, again, global village, corporates need to have a geographical footprint in many respects, and so having banks with local expertise is absolutely vital. But coming back to your question about the challenges, I say certainly cash flow forecasting, payments is still a challenge for me. I think in terms of today, you think about payment visibility. Don't say Swift GPI gives us what we want. It might do in terms of end to end, but what happens in the middle? We still lose a bit of visibility from what happens in the middle if anything goes wrong. And then the age-old issue of KYC, right?
Know your customer.
Yes, know your customer, indeed. I have a personal view about when I see that being resolved, mainly because the technology is already there in blockchain. It just comes down to, as always, I'm afraid, the banks. Fintechs, I think, are pretty good in terms of pushing that envelope, but I think some banks are beginning to pick up their pace, but we're looking at, globally 14,000 banks. That's not going to happen overnight.
Excellent. It's so interesting. And I was going to come back to that multi-bank strategy. Like out of the survey, it said 90% of organizations now have a multi-bank strategy. Like I remember when I was covering corporate treasury a few years ago, obviously, there was that move towards like centralization. There was a move towards like even having one global bank that you worked with, and that was it. Can you share some of your perspectives on how having a multi-bank strategy really helps your organization?
Yeah, I mean, without question, now you're thinking today the way that technology has evolved and the way that companies are evolving. I don't think even a small startup can afford to, in fact, thinks in terms of just being within their specific geographical region. So, and we all know now, it really doesn't matter where you're located as an office or as an individual, frankly. So from that perspective alone, it's so important to have the ability to have a diverse banking group globally, and that's obviously as appropriate. But I think it comes back again to, having your risk kind of managed in a very kind of diverse way, because having sort of witnessed, if you like, the SVB failure, there's a certain sensitivity, rightly so, to putting all your eggs in one basket. So that makes complete sense to me. There's another element to this in terms of putting my technology hat on. As I said before, not all the banks are particularly known for investing and advancing technology. So I think having more than just one bank in your group gives you that option and optionality and choice, if you like, in terms of hopefully the banks you've chosen, at least one of them will be kind of investing in the technology and sort of hopefully looking ahead in terms of 3 to 5 years, how they can provide the solutions that we need today, really, for the pain points that we're suffering with today.
Excellent. Okay. And then, of course, you mentioned cash visibility. We talked a little bit about that earlier. Managing liquidity, and it's all cross borders. Obviously very complex situations. How do you address those challenges within your organization? And then what steps would you say have been most effective?
So first of all, let me explain in terms of how we're set up. So we are Ferguson. We are a North American leading distributor of plumbing and heating products, $30 billion business, but we're exclusively based in North America. In the 22 years I've been with the group, we have been in other regions. We've been in 28 countries at one time, but we've always operated on the basis that effectively we're supplying the local market. So in that respect, we're kind of fairly decentralized commercially, almost like a collection of businesses. And in its heyday, we did have at one point a policy of having at least 2 banks in each geography. So we had well over 20 banks for sure. But today, that group has shrunken again, as you say, with the strategy over time kind of changing slightly. We'll probably have more around 12 banks, but it's still quite a reasonable size group of banks. And it's not just American banks. We have got some European and in fact some Far Eastern banks. So I think the age-old approach, in my view, for a large company like Ferguson to our banking relationships is very shrewd and wise in many respects, because just the fact that we are operating in North America doesn't mean that we are limited to just dealing with US banks. Admittedly, they have a larger part to say, but we have a sourcing plant in the Far East as well, for example. So there again, it makes sense to have a Far Eastern bank in our group. We have an office in Switzerland, so we have a presence there as well. But other than that, all operations are, say, 100% in North America. But there are banks outside of the US, in North America, in fact, that want to have a relationship with Ferguson for various reasons. So it works both ways, in my view. From our perspective, it's good to have that diversity and to have the, some of the large international banks do have sort of certain attributes they bring to the table, in terms of the additional value they can add. But equally, these same banks quite like to have a company like Ferguson, a North American large company, on their balance sheet. So it works both ways.
Excellent. And then when we talk about that managing liquidity and cash visibility, how difficult is that when you have a multi-bank relationships? And then how are you addressing that actually?
I can understand, at one point, and when I started my career, it was particularly challenging. I suppose there are challenges today, depending which part of the world you happen to have an operation in. Because we're mainly North America, our challenges are probably fairly, relatively milder compared to other companies. But nevertheless, I would say, pointing to what Sathish said, with a cash pooling structure, a lot of that challenge is kind of mitigated, purely by having, access to and I would say we have 100% visibility of our cash, primarily through the cash pooling structure. In cases where, and there are some banks that aren't able, shall we say, to send a SWIFT message type MT 40, we have a kind of workaround, let's call it that, where they would either upload that information through a proxy or network bank, which that they would use, or because most of these banks don't really, we don't use them for making payments, they're usually for collecting cash, and they're quite remote. It's just a simple matter of making sure the balance is updated on a regular basis into our ERP solution. But again, coming back to our core banking group, any corporate will look at core banking group, and where we believe there's a requirement in whichever geography, then we'll seek to have a relationship with a bank. Sort of tends to be one of the larger banks in that geography.
Excellent. And then maybe my last question for you is, as you look towards the future, and I might ask this of everyone at the end of it, actually, and revisit it. As you look towards the future, what do you think will be the biggest trend or innovations in cash management for corporates like yourself?
Well, there's a lovely question, isn't there, for any treasurer, especially someone like me with my interest in technology. So there's a long wish list I've got at the moment, and sadly it's because I feel that the banks haven't really kind of kept pace with the way technology has evolved, particularly with the fintechs. But I'm hopeful, I'm very hopeful that there are certain banks, and certainly in our banking group, that are investing a lot of money in this and are beginning to partner with fintechs. So let me put what I think and what I would like to see happening in the next, and I'm not, I'm impatient. I can't wait 5 to 10 years. My time frame is 2 to 3 years, and not just my time frame. Look around you. Look at how fast the world's, sort of evolving. So, digital currency in the next 12 months, it's happening. I mean, it's happening already. It just depends on how widely used it is by other corporates. And one thing I would say is, and I know not a lot of people are aware of this, watch what's happening in Africa. It is growing quite incredibly, and that's something I've always said, and I'm continue to say, is an area that will surpass the rest of the world in the way that the speed at which they're growing, and in terms of technology they're implementing. So that's one I would say. Digital currency, blockchain, it shouldn't really be a pain point, frankly. There's a solution. There are loads of solutions out there. The technology is out there. It just needs a bit more effort from the various stakeholders involved to make it happen. And certainly for us corporates, not to have to talk about it anymore. So that's happening for me in the next 2 to 3 years. And of course, I'd be remiss if I didn't mention the two-letter word AI, because sure, that's permeating everything we do, in whether it's with with Treasury or the world we live in. But specifically for Treasury, and in fact some of the banks, we're talking about predictive analytics. I think it was mentioned in the survey, auto reconciliation, fraud detection. For me, these are low-hanging fruit, and why not?
Excellent. All right, fantastic. Rachel, I'm going to bring in you now. Can you walk us through how the survey was conducted? Obviously, you were conducting the survey. And were there any sort of regional or company size differences that stood out in terms of the findings?
Yeah, so we've been working with Tietoevry for a number of years now, and we have a very kind of dedicated following when it comes to this survey. So we ran it between April and July earlier this year, got over 100 responses from across the various global regions and industries, asking questions around sort of banking relationships, cash management challenges, as you've already explained, and pooling mechanisms as well. And there were a few regional and company size differences that did stand out. Without risk of sounding like a broken record, one of them was that sort of larger organizations that are operating in multiple countries reported more difficulties with that sort of real-time cash visibility issue. More specifically, we did find those respondents in the sort of APAC, Asia region struggled more with those challenges, and it might be because there's a slightly more diverse regulatory environment there. The banking infrastructure across the region is a little bit different than other regions. And then sort of relating to company size, and it's something that Sathish and Royston have also hinted at already, is that the larger organizations tend to be adopting these more diversified approaches. So I'd say they're probably two of the biggest trends that we saw.
Excellent. Okay. And then were there any surprise findings from the survey?
There wasn't anything that I would say was surprising, but it was interesting to see some of the trends that we'd seen sort of creeping in the 2022 survey gain more traction. So for example, there was a rise in the number of respondents not using any pooling mechanisms. So I think that increased from around sort of 26 to around 30% this year, which might indicate that there are organizations, or a growing number of them, struggling to implement these mechanisms and maybe are exploring different strategies for liquidity management. And then going back to sort of real-time cash visibility that both the gentlemen have mentioned, that's increased to 63% in 2024. And again, reflects that growing trend of that push in the digital sphere and treasury management of needing that real-time data. So as Royston hinted at, I think it'll be really interesting to see how the teams bring in AI and whether they can just take that data that they probably already have and just use it a little bit more effectively.
Okay. Sathish, I was just going to ask you one more question and then do the wrap-up question. Given the growing complexity of managing cash in multiple regions, what role does streamlined processes and TMS, treasury management systems, play in improving operational efficiency?
I think if I can talk about us as a solution provider, we're constantly coming up with new features like, for example, virtual account management is one thing that we've seen corporates use in many different ways, which really brings down the complexity. For example, Royston did bring about having multiple banking relationship, and how do we have an aggregated view. That's exactly what virtual account management does. And then another solution that we also recently launched is a virtual branch, where you can really get access to the payment infrastructure in a country without even having a branch network in that country, right? So these are things that we're constantly working on to make life of treasurers much more easier. But there are a number of initiatives like this in the market. We can talk about that. That can be a topic for another day.
Yeah, a whole another webinar, I'd say.
Another webinar, absolutely.
All right, fantastic. Okay, well, thanks all of you for your insights. It's been magnificent. But I'd like to go around the panel for one final thought. So in one sentence, what is the key takeaway Treasury professionals should focus on as they move forward into 2025? And Rachael, I'll start with you.
Oh, I don't want to pick the technology angle, but I am going to say digital transformation, but not for the same reason as Royston, more so because I think that if they can use it to simplify tasks and cut down on their manual work, they'll be able to elevate themselves as to a more strategic partner within the finance function and take on that more sort of divisive role.
Excellent. And Sathish?
Yeah, I would still, in a way, align to my opening remarks. There is a trend of high volume to high value. So, both the banks and the corporates should really try to modernize their systems so that the systems are ready for real-time economy, which we, in all the conversations with our customers, which are banks, we feel that they're struggling, with the, legacy cash management systems. So that's very important. And number two, AI, Royston did bring that up. AI should not be just limited to, doing your fraud prevention or, trying to do more real-time reconciliation, but also, we have a vision, how to make life of a treasurer very cool. If it were, Alexa, can you give me cash position on this account, right? You get it in a voice, right? So we want to also work towards how to make life of a treasurer even more productive and a bit more cool, if I want to put it that way. Yeah.
Excellent. And Royston, you already talked a little bit about CBDCs, or well, digital currencies actually, coming in next year. But is there anything else that you think, or what should your peers be really thinking about, you think, next year?
So, look, we have the unenviable position of being in the middle, I see it that way, between the banks and the fintechs, let's call it that. And we have had pain points for years. I think this next year, the next 12 months, 2025, is going to be a tipping point for the banks and for the fintechs. The banks have already outlined where I think they need to kind of, let's say, pull up their socks and give us some of the solutions and functionality we've been kind of desperate for years. I think fintechs, in particular TMS solutions, are also coming up to a tipping point, because they've got to make the decision in terms of whether they kind of, really embrace the future technologies that are there today and will certainly add value, like I mentioned about KYC and so on and so forth. But in terms of also partnering with the banks to deliver those solutions. But above all else, I think for the treasurers, this will be a year where we're always looked at and appraised about where we're adding value. Well, I think the technologies that exist there today will enable most treasurers, if not all treasurers, to quantify those KPIs and to actually demonstrate to their boards the value that they're adding and the value that, in fact, Treasury is adding. Regardless of your view on whether AI is going to replace people's jobs or not, which I don't believe it is. If anything, it is what it is. It's artificial intelligence, so it needs humans to operate it and to use it wisely. So I definitely think it's a huge year for us next year in many respects.
Excellent. All right. Well, thanks again to the panel members, Rachael, Royston, and Sathish. Thank you so much. And also to everyone that joined us. And if you'd like to explore the 2024 Cash Management Survey Report in more detail, it's available at the link at the bottom of your screens. And obviously, we look forward to continuing this discussion at SciBOS 2024 in Beijing. Thank you so much.
Thank you.